And what I realized was I had asymmetrical risk. Asymmetrical risk is when you have relatively low risk for relatively high reward. You have a huge delta here in asymmetrical risk, especially when you're young. Now, if you wait till you're 50 years old and you got a mortgage and a house and kids and family, that's a different level of risk. But when you're in college, you got no family, no kids, no mortgage, your risk levels are very low. Hence, you typically have more asymmetrical risk. And it changed my whole life.
Welcome to the I Own It podcast with Ben Reinberg.
All right, we're live from the Ben Reinberg I Own It Studios days from Laguna Beach, California, and another great guest, really intriguing that you're going to enjoy listening to today. Bridger Pennington, thank you so much for joining us today. What a pleasure to see you.
Good to be on, Ben. It's fun actually seeing you. We have a shoe in our office dedicated to you from what we gave to you as an award for your fund. And whenever guests come in, it's always like front and center. And I always go, oh yeah, this is Ben Reinberg's shoe. We always talk about your name is brought up quite a bit in our office because it's just, you're one of like a whole wall of shoes. Anyways, it's pretty cool to have you on there.
Very cool. And we'll touch about that with your Fund Launch Live conference. I was there and received that award and was very grateful for it. I still have that pair of shoes. Let's kick things off. Let's give us a short summary of your top professional accomplishments and how you did it without this typical pedigree, because you're really a rebel against how Wall Street teaches raising funds. So give us a little backdrop of your accomplishments.
Yeah, I'll give you just a quick run through. So I run a company called Fund Launch. We now have 60,000 members that have taken at least one of our courses on investment funds, how funds are built, how they're put together, how they're run. So this is venture capital, private equity, hedge funds, real estate funds, debt funds, almond farm funds, cow manure funds, you name it. We got funds doing everything. Last year out of our group, we launched 130 funds. We have 12 funds over $100 million, one fund over $1 billion, I think 54 funds over $10 million inside of our community, which is really cool. Additionally, I run a hedge fund as well right now, 8-figure hedge fund. I've ran 2 funds prior that were debt funds. And then I'm essentially a partner or a strategic advisor on 8 different portfolio funds in our portfolio companies. So that's kind of a quick and dirty highlight of what we do. So I run a fund and we help fund managers all around the world launch funds in the kind of emerging fund manager space.
Are you still doing the crypto fund, or what's your space you're playing in with your fund?
So my main fund, is a crypto hedge fund. That's been really fun. We can talk about crypto's been crazy this last year. It's been really fun. A bunch of new updates on that. And then we have 8 portfolio funds that are doing all sorts of crazy, just different stuff. We have a real estate one that does Forex trading, another one that's in single family real estate. I can go on and on, but a bunch of funds that we advise on and work with.
So let's touch a little about mentors, because mentors and coaches are so important, especially what you do for a living. And a lot of your videos, Bridger, I've noticed that you talk a lot about different mentors that were critical to you early in your career. I know I've had a tremendous amount of mentors from all over the world that have helped me grow to be the person I am in commercial real estate. What are like a couple of your favorite stories of mentors that helped you navigate through challenging moments in your career?
Yeah, I'm a big proponent of coaching and mentorship. I like paying for it because when I pay attention. And typically, even if I had the greatest guy in the world, if I didn't pay for it, for whatever reason, I just don't focus on it. And I actually don't take their advice as well. I think we totaled up. I think I've spent about $285,000 in the last 4 years just on coaching and or courses and or mentorship. So a few highlights that are massive and probably other people could have told me this, but whenever you pay for something, you have a mentor that's done it before you. If you don't follow their advice and they're ahead of you in business, it's as good as just burning money in a garbage bin. I might as well take their advice. They know something about business that I do not. Otherwise, I would be in their shoes. And so I might as well follow what they are telling me. So a couple, I guess, highlights. First off, my dad is an incredible mentor. We'll probably talk about him. I know you've met my dad before and heard from him. My dad co-founded a massive family of real estate funds. They currently manage about $48 billion. He's now since retired. My dad mentored me through all launching funds and scaling funds. Still to this day, though, my dad's never invested a single dollar into any of my funds, deals, projects, but has been an incredible mentor. And I honestly, I say that openly. I say, I feel so blessed that I had a dad, and my brother is an investment funds attorney, worked at the largest law firm in the world for funds. I have a brother and a dad that I can go to at any time and get advice or feedback or whatever I need on my fund. And as a relation to that, I tell my people in my group, like, use what I had. Like, I have this incredible family. And my dad didn't go to Harvard, didn't go to Ivy League schools, barely graduated college. None of us went to Ivy League schools. We're just regular entrepreneurs, but we figured out this really cool space of funds, this very incredible vehicle in business called investment funds that typically is reserved for the Ivy League elites. And now we're trying to democratize Wall Street and spread that with the world. So my dad's been incredible. The one thing that I'll share just recently, and I love giving shout outs to people that have helped me. I'm not one. There's some people online that I follow that never say a name, but I'll give a huge shout out to Russell Brunson. Really cool dude. I was in a private meeting with him just a few weeks ago, and we were sitting there, and we were talking about, my personal brand, and we make a lot of videos and we do YouTube stuff and, other things. And Russell said, he goes, Bridger, there's a guy in my area, in my, walk of the business world that has made way more money than me. And by the way, Russell's, I think, close to being a billionaire, way more money than me, done way better than me. But he goes, he came up to me and said, he goes, everyone knows who you are. Everyone knows about you. And they all know about you. And he goes, they know about me because of my book. He goes, all great movements, all great, even people. You look at Hitler, he wrote Mein Kampf. You look at the Constitution. It was a document. There was a manifesto. Nike with Phil Knight. He wrote some type of physical document. So Russell was telling me this face to face. He goes, look at the Book of Mormon. It launched a full every religion or thing that sticks around and truly has great momentum behind it was usually started with a book and or a document that wrote down exactly what the group believes in and who they are. And he says, Bridger, you've done an incredible job, and you've done a great job building a cult and this group. And we had a 2,000 person event just barely of Wall Street rebels in Miami. But he goes, the next level for you is to write a book that really puts your flag in the ground of where you guys stand and is the manifesto. And so since then, we're actually almost halfway done with the book right now. That's all about what we stand for, where we're at. And then actually my dad I'm co-authored a book with my dad called Dollars, Gold, and Bitcoins, coming out in just a few months, talking about world reserve currencies, where the BRICS nations fit in with the US nations, kind of geopolitics. My dad's very expert on that. I've been a contributor to the book for his book, but that was something that really stood out to me currently that I'm working on and shifting, that I thought was so interesting, that all great movements are started with the book. Actually, a great example is Alex Hormozy. I've known Hormozy for years. We talked, he came out and actually went boating with us in Bear Lake before he was famous. He had like 3,000 followers on Instagram. He's just this small dude. I knew him because of the internet marketing space. The moment he wrote his book is really what changed everything for him. That book drastically changed his whole presence online and everything he's done. And he's an incredible entrepreneur and done very well. But you look back at him, his book changed everything for him. Russell Brunson, the same way. He goes, the moment I wrote .com secrets, everything in my life changed. And now I'm not saying just any type of book. It's got to be a book that puts your flag in the ground, that really sets up frameworks and who you are and what your thing is. But that's just I could go on and on, but I'll just share those two right now, which I thought were pretty insightful.
So I love your 4-step process for starting a fund. I have a fund live right now, the Alliance Medical Property Fund, that's off the charts. It's probably one of the best commercial real estate funds out there if you're interested in medical properties. I see it an agile way to test your product quickly and cheaply in the marketplace. Explain to everyone your approach, share a bit about the approach you teach and what makes it so effective.
Yeah. So it's funny. I started to interview, I have a show as well. I started to interview fund managers on my show. And when I was just starting out, what I found was a pattern of almost all of them, how they launched their funds. And especially with fund managers that were non-traditional. They weren't just your traditional Wall Street suit that went and launched a fund. These were just entrepreneurs that ended up figuring out what a fund was and launching. And almost all of them had this same exact process, which is actually the exact opposite of what most people teach. If you go look up online how to launch a fund, you'll pull up a blog post that says, go hire a lawyer and go whatever. And it has all these steps, which none of these guys followed. And so I finally coined the phrase, the fund launch formula. And we built it out into this 4-step formula called the fund launch formula that we've now ran hundreds and hundreds of funds through. And it's been decently successful. Ben, it's great to hear that it's success for you guys, that we've seen time and time again, just success with this method. And so I'll go through this quick. I could probably spend 2 hours talking about it. I won't, but step 1 is find an incredible deal. Lead with a good deal and or your thesis. And so you build that deal out. And most people start with that. Oh, I want to go buy medical properties, or I want to trade crypto. And I go really stress test that, right? Which most do. Now, what most people do though, after they find this great deal, is they say, okay, let's go hire the lawyers. Let's get started. And let's spend, it's like $50,000 to go hire lawyers. And I always go, hold on. before you go do that, lawyers, most funds never launch because they do that step and they end up burning 50 grand and they never know exactly what they need. So I go, step number 2, go and frame your fund out. So step 2 is figure out your pref, your catch up, your waterfall structures, how you're going to pay back investors, what's your timeline horizon, what's all your financials. Boil that down into a pitch deck with all of your data room. And then step 3 is actually go and pitch investors. Start pitching. And everyone goes, well, wait, hold on, Bridger. Like, I don't have the legal docs done. How do I pitch investors? I go, it's okay. Go find people, go find Ben or me, or I would, come to you and say, Ben, hey, this isn't official yet, but I'm looking at doing a brand new fund. We're going to go do this unique strategy in, mixed use real estate. We're going to take big box, old malls and convert them into data centers. I don't know let's just call that's the idea. Let's turn old malls into data centers. And I'm going to, hey, here's kind of what we're thinking for pref and catch up. What do you think, Ben? Is this something to be interested in? And Ben will give me some feedback and go back and forth. And I'll say, well, we're thinking of doing a 2% management fee and a 20% carry. Would that be interesting to you? And a 4-year horizon. And Ben's going to give me feedback. And Ben might go, you know what, man, 4 years seems like a long time, or whatever. He gives me feedback. And I say, well, this isn't official. I can go change those things. But let's say I fix those things. Ben, would you actually put money in? Could I put you down for a verbal commitment to this fund? If we go fix these, and again, nothing's official, but could I count on you if this all worked out? And what I'm going to do is try to test the market to see if Ben would put money in. So just a quick example, in the last 2 years, I almost launched 3 different funds in different verticals. And I won't tell you every example. Mm-hmm. We did this. We went through the path. We thought it was a great idea. We took it to potential investors and they hated the idea. They hated our structure, our team, how we had built it. And we were like, oh man, okay. And we went back to the drawing board. We fixed a few things. We brought it back to them. They still hated it. And I just said, you know what? Maybe they're right. Let's not launch it. And I'm so grateful. I didn't waste all the time and the money going to lawyers first to build a fund that would never launch. Those 3, I think it was 2 or 3, we ended up just saying, yeah, we're just going to scrap it. Not a good enough idea. We went and market tested to our investors. They didn't like it. And then we found we did a crypto fund. I found a brand new partner. And by the way, just so you're aware, I'm very good at, I would say I'm good at funds. I'm maybe an average investor, maybe a little bit above average investor, but I try to find really good operators and I partner with them. So I found a really good operator in crypto. We took it to people. They loved it. Investors just were raving, begging us to put money. We said, great, let's launch. And so we launched, we raised $10 million our initial launch. We've grown since then. It's done extremely well. And it's been awesome because we followed the fund launch formula and did that. And we built the last step is step number 4. You then once you have let's call it verbal commitments, then and only then you go to lawyers. And I go to a lawyer that typically charges $50,000. And I say, hey, I know exactly what I want. I'm going to save you so much time because I know this game of funds. You bill by the hour, right? Yeah. Okay. I'm going to save you so much time. I want X, Y, and Z with a drink and a side of fries. Can you build this fund for me? And the cost to me was like 10 grand or 15 grand when he usually charges $50,000 for a fund because I knew exactly what I wanted. Our investors had already gone back and we'd stress tested little certain things of it. And boom, we launched our fund. Then we go back to the investors, pull all the money with hard commitments, and we're off to the races. So sorry, that was quick. That was a 3-minute overview of the fund launch formula. I usually spend like 45 minutes teaching that, but that was the quick, dirty overview.
So I've been in commercial real estate for almost 3 decades. And so we have a good sense of what sells to investors. But if you're young or just getting started and want to create a fund, definitely look into Bridger's program. I could tell you it's very well organized. What I like about it is simplified. So if you don't have a lot of experience and it's new and you have this fear of how do I get started? How do I process this? How do I actually get started? Which is the hardest thing for people in this world in business, especially starting a fund, because a lot of fear. Can I raise the money? Does my concept make sense? His 4-step formula is really effective to get you to the place you want. So you're not wasting money and time and understand exactly how to move forward with your concept. Let's touch on this a little bit. You have a great way, Bridger, which I really love, of explaining the benefits of syndications versus funds. For years, we syndicated at Alliance, my company, and then we decided to get into funds, which has been great. So for our listeners, break down the building a fund is the route to building serious wealth and those differences you see between the syndication and the funds and why you preach funds and that's kind of your whole life.
Yeah, it's a great question, Ben. So now I'll disclaimer, I actually like syndication. Syndications are great to get started. Mm-hmm. However, I don't think the goal is to keep syndicating forever. if you're good at syndicating, you should, I think, strongly consider moving to the fund model for a few reasons. Now, if people are listening and have no idea what I'm even talking about, a syndication just in general, I'll summarize a house flipper in like 30 seconds. So a house flipper, for you guys that flip houses online, typically what they're doing, they'll find a house to flip. They go use their own money, bank money, hard money, or debt. They'll bring in debt from the bank or whatever. They pull that money together. They then launch an LLC. They go flip that one house. And then when the house makes money, they pay back all their investors. So we had a guy join our group. His name's Brent, sharp dude. He was doing about 4 house flips a year, which is pretty good. He was making an average of 50 grand a flip, which is 200,000 a year. That's not a bad income. We then set him up a fund. The next year, he flipped 74 houses out of that fund, from 4 to 74. And what he did was, instead of every time he found a house, he had to recall his investors, get money. Okay, we got 30 days to close. Money's got to be in by Friday. And then set up a new LC and flip. He raised the money once. He set up all the entities and documents once. And because he did that, he could go flip houses at scale. So what I was actually speaking in front of 300 house flippers just last week or 2 weeks ago in Houston. I said, do you think you'd win more deals or less deals if you're bidding on properties and you can close tomorrow and the guy's got to wait 30 days? Well, yeah, I'd probably win more deals. Do you think you could, if you're a repeat customer with a bank and you've got a big fund versus a small syndicator, do you think you'll get better or worse rates from a bank? Probably better. So your cost of debt goes down. Hey, do you think if you hired crews and had them move from house to house doing the tile and the paint, you could probably pay them a little less average per house because you're giving them volume of deal flow? Yeah, I could probably pay them a little bit less. And I go, aha, all of a sudden, you can actually overpay your competition, outbid your competition, and win more deals than your competition. Interesting. And I had this whole room and I said, how many people in this room in the last year, you were bidding on a property and somebody outbid you and you turned around and said, that guy's going to lose money on this. He overpaid. He's an idiot. The whole room, their hands went up. And I said, I've done that too. We all do that. Oh, that guy's an idiot. He overpaid, doesn't know what they're doing. Their pro forma doesn't make sense. I know how much that house is worth what doing it. And I go, but what if they're not playing the same game as you? And the whole room went dead silent. And I said, last year, 1 in 5 homes was purchased by Wall Street or institutional investors. What if their cost of capital is a full percentage point cheaper than you? What if they have economies of scale? And what if they're not flipping one house, but they're flipping a pool of $100 million worth of single family homes and they can flip it for whatever X percentage higher? I bet your bottom dollar they are making money. They're just playing a different game than me and you. And the whole room was like, oh, crap. I said, that's the beauty of a fund. And I said, additionally, most people with their, grandma and their dog can pull up a couple $100,000 to go buy a single family house. Very few people can pull together $84 million to bid on a multifamily apartment complex because and then all of a sudden your competition goes down. You can scale more. One of my mentors has a fund. He was saying they were bidding on a real property. It was $100 million, the asking price. A syndicator came in at like 90, let's call it 99, right around 100. That's the asking price. He goes, they came in at 94 million. He goes, we won the deal. We were $6 million lower than the higher bid. They gave the deal to us. Why? Because we run a fund. They know we can close. The syndicators needs, 180 days to get money together and financing. We can close in, 30 days. And we've done deals like this before. It's not just money, it's terms. The last thing I'll share on this whole concept, if you guys have seen the movie The Big Short, there's a great scene with Michael Burry in there, and his investors come in and they're yelling at him. Like, Michael, get out of this position, get out, right? And Michael kind of just says, sorry, the housing market's going to fall and tough. And the reason, I think that little scene shows the power of a fund, why most people that are successful in syndications or finance end up in funds, is because of that scene right there. You have a lot of control over the fund. In a syndication, if your biggest investor, let's say they didn't pay taxes last year and they need to pull their money out, they can kind of get their elbows out. They can jerk you around. They can sue you. They can do other stuff. And they can kind of force your hand in a syndication. They can force you to sell, do a lot of things. In a fund, they are a limited partner. And if they forgot to pay taxes last year and they say, Bridger, I got to pull my money out. And you say, hey, sorry, the property is not ready to sell yet. I don't serve individual investors. My fiduciary responsibility is to the fund. and this property just isn't ready to sell. Or Michael Burry, we aren't ready to get out of this position yet. Sorry. And the fund docs say you can pull your money out, but it's a 50% penalty. So those are your options. Either leave your money in or pull your money out at a 50% penalty because the property is not ready to sell. And you hired me as an investment manager to do this. A fund gives you an amazing amount of control over your investment decisions. And so, sorry, I went on, but those hopefully spell out a few benefits, pros and cons of a syndication versus a fund.
And let's recap that because I could show you the four pillars of our funds, especially the Alliance Medical Property Fund. When we look at, number one is diversification. What's great about a fund, no matter what you are investing in, you have a pool of assets to be diversified. So take our fund, the Alliance Medical Property Fund. We're in medical and veterinary properties around the United States, high population growth areas, whether we'll have a property, a dermatology, a surgery center, gastro, neurology, dialysis, you name it. So not only are they in different areas around the country, great areas of the country, tax-free states like Florida and Tennessee and Texas and you name it, Utah, great areas to invest in. And what ends up happening is you have different niches, different properties, a lot of diversification. That's the first benefit. The second is what you touched on, which is so true, is purchasing power. When you can go, especially in commercial real estate, to the brokerage community or the sales community or physicians, say in our medical property fund, what ends up happening is that they know you can close. We provide certainty, and certainty is tremendous in our business, commercial real estate. It isn't any business because when you provide certainty, someone will sell you a property for $9.7 million instead of $10.2 million. It's a huge difference. It generates returns and provides great stability in the fund when you could buy assets because it's all, especially commercial real estate, it's how you buy that. The money is in the dirt, as we say. The third benefit, which is really important that most people don't talk about, is scalability. So in our fund, to give you an example, if you're in hard assets like us, commercial real estate, and we sell a medical property, we buy it for $8 million, we sell it for 12, we could do a 1031 exchange, take that one asset, Bridger, and now all of a sudden it could be 3 assets. So we just built more equity without asking for a dime from our investors in scaling the fund, more assets, more diversification as well, which is a beautiful thing. And the last thing, which you touched on, is so true. People don't think about, especially in a rising interest rate market, is cost of capital. When we go out into the market in commercial real estate, and we have the ability to give a bank or a lender a repeat business, and they know once again, let's look at the word certainty. Alliance can close. Ben Reinberg's company can close. They have a lot of experience, great leadership team, been around for almost 3 decades. They provide us certainty. You know what? Instead of that 300 spread over the SOFR, we're going to give him 250 because we know he has 2 or 3 deals coming behind. That's a huge benefit. So those are your 4 benefits of those funds that are tremendous. And that's why with Bridger and his group, Investment Fund Secrets, I encourage you to look at Fund Launch Live, which is a tremendous event that he holds that I've been to, which really will give you a taste of funds. So if you're in a particular industry and you're an entrepreneur and you're looking and saying, well, how do I really grow my business and scale it? I think a fund is a great way to talk about where you need to go in your career, especially if you're young and you're getting started off, or you're an employee and you're looking to go out on your own. It's a great way to hedge your bet of how to get involved in business. One of your entities, Fund Launch Live. Let's talk about this event and the kinds of people you help and the team you have that help produce this incredible event. It was just in Miami. Year before, it was in Las Vegas, which I was at. Do you know where the next event's going to be and what can people look forward to? And give people a little taste of what goes on at Fund Launch Live.
Yeah, Fund Launch Live is a unique event where fund managers come together. It's all about funds, investment funds, and launching funds from the kind of what we call ourselves the Wall Street rebels, the unconventional ways. Our goal is to decentralize Wall Street. Right now, Wall Street is consolidated of pretty much 3 big firms, State Street, Vanguard, and BlackRock, that own. Looks like they're on the path. We're currently about 48% of S&P 500 companies is controlled or in a relation owned by those 3 companies, which is insane. They can push agendas and do certain things. It's becoming more like a monopoly type of thing. And I believe we need more people understanding how funds work and how they're built and structured. So Fund Launch Live is a full event dedicated to helping people launch and scale funds. to get over 10 million and then over 100 million. That's why we give out shoe awards. Ben, you've won those awards as well. People that in our community that go out and do this. So yeah, the next one is in Orlando, Florida. It's going to be sweet. We're at the Grand Hyatt there. We're going to have 3,000 people. This event, the last two events have sold out, which is insane. It's always shocking to me how many people want to come learn about funds. You know, you think it's this, like when you talk about investment funds to your aunt or your whoever, they just think you're crazy. But there's enough crazy people like me and you that want to do this. And it's fun to get like our whole family and community together in one spot. And honestly, the best part of the event, we bring in big speakers. Inside the room, we talk and we share and people can connect and meet people. And we do a lot of cool stuff in the room to help you guys network and meet other people that are fund managers or capital raisers or have deals, but don't have capital or have funds, but don't have whatever you have, but they don't have. We try to do a lot of that to help this whole room and group do more deals together, meet more people. And that's the whole goal. So it's pretty fun.
Let's talk about so obviously people are getting started and there's fear going on and they're concerned. Tell everyone your first big deal of raising funds for. What was the amazing deal that you pitched to your investors when you first got started?
So very first, I was 22 years old. I had learned about funds and I didn't know my dad had any money at the time. We lived in a relatively small house. My dad drove a car with a dent in the door. I had no idea. And to make a long story short, I met with his business partner. His business partner is in this huge, gorgeous mansion and drives these amazing cars. And I asked him to be my mentor. I'm like, hey, can you mentor me? And he says, go talk to your dad. Your dad knows way more about this than I do. I said, no, my dad's kind of broke. Like, we're good. I want to learn from you. And he says, you know, me and your dad make about the same amount of money. And my chin dropped to the floor. I was totally like, are you serious? Like, you're making this much money? Anyways, at the time, they were managing about $8 billion of multifamily real estate, which is, to put in perspective, that's 2 times bigger than Cardone Capital is today. And this was 8 or 9 years ago. And anyways, long story short, whenever you learn about something, you start to recognize that thing in your life. And so I was in college, I was in school, and I was working an internship. And at that job, I saw an opportunity where the clients coming through this business needed financing. They needed short-term loans. They were like 60 to 90 days long to consolidate debt. So we had this great idea where we would do a debt consolidation loan. We would maybe give them 10 grand. They would go consolidate their debt. It would allow them to get more credit. In about 2 to 3 months, they could come pay us back the 10 grand plus a whatever interest rate we charged them. And so we thought it was a pretty good idea. I talked to the owners of the business. They loved it. I went and took it to my dad. I actually pitched my dad for money. Like I said earlier, my dad said no, but he said this, which I thought was a pretty good life lesson. He said, your first investor is your hardest investor to find. If I invest in your fund, it would ruin the experience of you raising money on your own. This will be a crutch that you'll never be able to recover from. And he said no and kicked me out. I went and hit the streets and I talked to everybody I knew. I talked to former bosses, college professors, anybody. And I raised a whopping $49,500 and some change for my first little teeny micro syndication fund. And now a small amount of money, but it was enough to get started. We were doing these loans that were $2,000, $5,000, $7,000. We did this little syndication. We made a 64% return on our money to our investors. So it did extremely well. Small amount of money, but good return. We then closed that. We then launched we called it our second fund. We raised and deployed millions of dollars out of that fund. It did very well. I ran that for about 3.5 years. I believe our cash on cash return to investors were year 1 was 62%, year 2 was 47%, and year 3 was 36% cash on cash return to investors, which was phenomenal. We ended up having a competitor come and actually buy out our entire fund. We had a big exit on it. It was awesome. So we sold that business. And then since then we started fund launch. Then we launched, I started the Ugly Unicorn Funds, which is in crypto. And we're now doing that. And we have the portfolio companies now. But that first little thing, these were micro loans. We were doing hundreds of these loans that were $2,000 to maybe at the top $20,000 debt consolidation loans that were just fast. We could just the reason we got such high returns because we could turn our capital maybe 4 or 5 times a year. We did it very efficiently. We had a lot of loans coming in, a lot of people closing and coming in. We just had this big machine that we were just having loans. And I was still in college at the time doing internships. I had a team of college kids that were working for me and stuff. We were running this little fund and we were sending out every single month. We'd send a check out to all of our investors and they loved it. Every month they'd get $1,200 or $1,500 or $3,000 or $5,000, whatever the money was for that investor. And it was a really fun business to run in college. And And I'd go, it's funny, I was getting recruited from investment banks and other places. And they're like, you're running a fund right now? I'm like, yeah, we're running this. They didn't believe me. I had to break it down for them, like step by step, everything we did. And half the guys were like, man, you should just keep doing that. And I was like, yeah, I actually got an offer to go work in Silicon Valley, 6-figure offer. I ended up turning it down and kept running that fund and did really well. And then we've now grown to what we are today. So, but that was pretty fun.
No, that's fantastic. I mean, I love hearing people's first deal story. My first deal was, most people know it, listen to the show, was an industrial deal back in the 90s, syndicated. It was a couple $1 million. Got a loan from my godfather of 80 LTV, and we sold it for about a 2.75, 3x multiple 4 years later. And,
wow.
And that's what launched us. But that was a big deal. I was in my early 20s. I had raised a few $1 million. Never did it before. So for everyone out there listening, you can do it. And especially a fund, if you're interested in looking at funds, definitely take a strong look at it, because I know internally you're going to say, well, I don't know, I don't have the track record, I can't do this. But if you don't try, you don't put that effort in, you'll never know. So I remember when I was that 22, 23-year-old kid from Chicago, trying to raise money, I had the same fear as well. And so whatever you do in life, you just got to keep pushing forward. And if you do fail, just get back up and keep going. And life is not easy, but if you keep pushing forward and believing and taking in great mentors, just like I do, and Bridger has explained as well, you will definitely see a lot of success in your life and your career. And so in your career, what would you say your biggest risk you've taken, whether personal or financial, Bridger, so you could tell people?
Yeah. And on your last point there too, I mean, starting young, Ray Dalio started Bridgewater at 26 years old.
Mm-hmm.
Warren Buffett started his fund at 28 years old. I know we look at these guys today and wow, they're so amazing. They're so successful. They've been at it for 50 years.
Right.
Like they compounded returns year after year, and they just kept at it. And they had some bad years, some ups and downs, but they just kept producing and returning. And the compounding effect of fund management is massive, is huge. It's an amazing game to be in. But yeah, back to your, bigger risks we've taken. Actually, I just had a kid in here just a few minutes ago. And so at the time, I'll take you back. So I was in college. I was considering dropping out of school to go and pursue all these businesses we were doing and everything. And I felt like it was a huge risk that I was going to take. And I remember this guy came up from Harvard. He spoke at our university, gave this great speech. He sold this company for all X millions of dollars. And then he ends his speech and he comes to the back of the room. He just stands there. And I'm in this room and I'm like, man, he's right. I'm going to just go talk to this guy. So I stood up. I kind of snuck to because somebody else was speaking. I snuck to the back of the room and I went and talked to this guy. And I said, hey, thank you so much. I go, I got one question for you. I go, I'm in college right now. I've ran a few businesses currently. I've done well. And I have these, as my fund. And I was going to launch Fund Launch at the time. I was like, I have these cool opportunities I want to go after, but I'm pretty nervous to drop out of school. It seems very risky. Like, what if it doesn't work? I'm going to turn down this job offer. This seems like a risky period of time. Is it better for me to work for the next, let's call it 7 or 8 years, get my legs under me, get some foundation, and then start a business when I'm 35 or something like that? And he looked at me with this kind of strange look and he said, hold on. He goes, Bridger, let's say you fail. Let's say this thing hits rock bottom. Do you have a family member or a friend that you could move in with? If you really hit rock bottom, they would let you move in with them. They would have a bed on the floor that you could sleep on, or maybe some food in the fridge for 2 or 3 months. You could live with them. And I said, yeah, there's people in my life that I could do that with. And he goes, do you think the school that you're at right now, if you paid them money, they would accept you back in? If you just, they'll take your money from you. And I was like, yeah, they'd probably let me back into school. I could finish school. And he goes, we're not talking about risk here. Your worst case scenario is better than 90% of the world lives right now. He goes, your worst case scenario is you get to move in with a family member or friend who loves you, who has food in the fridge, has a place on the floor to you sleep, and a school will take you can go get a student loan or come back. And what, you got $5,000 in the bank? If you lose it all, cool. You lost $5,000. Who cares? He goes, we're not talking about risk here. And what I realized was I had asymmetrical risk, which is an investing term, which meaning, a lot of us talk about high risk, high reward, low risk, low reward. Asymmetrical risk is when you have relatively low risk for relatively high reward. And what he showed me was, Bridger, you have relatively low risk right now, but your upside is massive. You have a huge delta here in asymmetrical risk, especially when you're young. Now, if you wait till you're 50 years old and you got a mortgage and a house and kids and family, that's a different level of risk. But when you're in college, you got no family, no kids, no mortgage. Your risk levels are very low. Hence, you typically have more asymmetrical risk. And it changed my whole life. I thought, yeah, this isn't that risky. And by the way, we live in America. They have nets like bankruptcy and food stamps and all these things to catch you if you really fall. I saw a stat the other day. It was like, if you're on government assistance, you make more money than like 80% of the world makes in a day on government assistance. And so I could go on and on about this, but I've looked at this and at the time it felt very risky. It felt like I was going on a limb and I was going to take this huge leap and jump out. And that one guy that came and spoke, I don't know his name. I hope I can find him in the future and really thank him for this, but he really showed me that it's not that risky. And even us, whatever piece we are in our life, we think we're going to lose it all or whatever. But in reality, a lot of us are facing entrepreneurship is a very asymmetrical risk. And if we realize that and we keep after it, and my whole concept is I just got to keep swinging the bat. If I keep swinging the bat, maybe I'll strike out maybe once or twice, but if I can hit a single or maybe a double, or maybe if I swing and hit a home run, that would be amazing. Problem is most people never even swing the bat. They never even give themselves the chance to get up to plate and swing the bat because they are so scared about their mother-in-law of what they'll say or what their uncle that lives across the country will think about them. And we make up these stories in our brain about what other people around us will say or do because of our choices, when in reality, those are just limiting beliefs holding us back.
Oh, it's so well said. It's so true. And I remember when I did my first deal and started in business, what I realized that got me over the hump, Bridger, was what would happen. So if the deal didn't work, that industrial building, and it just didn't work out, I lost money and couldn't raise money, I would just be back to where I started. So if I didn't pull the trigger and try to attempt to raise money, close, learn, and grow from it, where would I ever be in life? I would never advance. I didn't come from money. So the only one that was going to change my life was Ben Reinberg. And that's the one I had to be accountable for. And so for everyone out there listening, the only one you have to be happy with is yourself. And that's who you have to battle every day is yourself. And if you can control your own emotions and you can keep pushing forward and know and say to yourself, hey, it's on me. I can't blame anyone else for success or failure. And you own it, just like our show. You own all your behaviors. You own your actions. Yeah, I'm telling you from firsthand experience, and Bridger can back me up on this, you'll see great success. You have to push forward. And if you fail, it's okay. If you haven't been in business long enough, and I say this often, and you don't fail here and there, you're not in business. That's part of life. Not every deal is going to work out. Not every day you're going to be able to raise money. Sometimes you don't get the loan that you think you're going to get. Sometimes the tenant leaves your building in a commercial piece of real estate. Things happen in life. If you're solutionary oriented and how you deal with challenges, that's what rises a person to the top. So growth is everything. So keep growing, keep learning, and you will see great success in your career. So let's talk about your father. I have a big affinity for your father, a tremendous amount of respect for him. Just an incredible businessman. And one of the things I love that he taught you and you talked a little about is that go raise your own money, because if I help you, you'll never learn. And my oldest son, who's now 23, he had the same premonition. He said, Dad, I want to start this venture capital fund. And I said, where are you getting the equity? And I said this to him, Bridger. And he said, oh, I thought I'd tap into your investors. And I said, no. And he said, why? And I thought about that moment when your father said to you, it was exactly my moment to have with my son. And I thank your father for this, because it taught me a lot when I talked to him about this lesson he taught you, is allowed me to say, if I end up helping Joey raise a venture capital fund, what kind of father am I being? Because then how is he ever going to learn how to raise equity? And so a lot of your videos, you talk about working on funds with your dad and what an incredible person he is, and how fortunate you've been to have someone in your life to teach you these lessons. What's it like when you have a chance to work with your dad? I mean, do you ever think about generational wealth you're building for your kids in the future, just like he did?
Yeah, it's pretty cool. And I love that story about your son. It's one of the greatest gifts my dad gave me was not doing that. I'll say this about my dad has zero equity or stake in any of my businesses I've ever done. My dad has just been kind of a mentor. And actually, I think on purpose kind of stays out of things. He does not want to be involved. I actually shadowed my dad for a month at his fund when I first got into college, like right after high school. But that was it. But my dad has been he's a guy that I can always call up and get an answer from, though. That's been amazing. So he's really let me run my own thing but if I needed an answer, like, hey, what did you do? And man, you had to fire an employee. How'd you do that? Man, that is invaluable to be able to call somebody and get that. And my dad has really stayed out of it. And what's interesting, I run a fund now, and I know you see this as well. I go to big family offices. I get to see wealthy families. And what's funny is there was this one huge wealthy family we went to and met with in Utah. They're a very notable name. I won't say who their name are, but everyone in Utah knows their name. We went and met with one of the sons of this huge family empire. And my business partner told me, he says, Bridger, he knew the guy. He goes, you're going to notice a level of sadness in his eyes. And I walked, and I thought that was really interesting. We walked in, we sat down, and we talked for about an hour about our fund and everything they're doing. And the whole time, this guy's a 45-year-old man. There was a deep level of sadness in his eyes that I could see. My partner, Dan, says, I know that with all my wealthy kids of really big multi-billion dollar people, they have a sadness and a deep lack of confidence. Why? Because deep down, they get invited to all these cool events and things, but deep down, they know they shouldn't be there. They didn't earn it themselves. And they go meet with people who did earn it themselves, and they see the lack, the disparity, the delta. And deep down, they know that they don't have it. And a lot of them say, oh, now we're going to do this big charity project, or we're going to go, and they're going to try to make their stake in the world. And still, though, it doesn't quite compensate for that hole inside of them. And parents, it's natural to want to help your kids and coddle them and give them all these things. I think one of the greatest things my dad ever gave me was not helping me in any way, shape, or form, landing a job. He didn't help me go out and get an internship. He didn't make phone calls for me to make sure I got into certain places. He did none of that. However, he was he helped me figure out the essay questions, or he helped me think through that, but he wasn't making behind the scene calls or whatever to make sure I got in or made sure this thing happened for me. And I thought it was one of the greatest lessons. And so what it's built for me is I have a great level of confidence now that I feel like I built my own, 8-figure a year business, right? I have an 8-figure fund that we run it now that I feel like I built myself, and with the help of God and some great business partners. But I feel like if my dad had kind of built that with me or done that for me, I can directly see how some of these big family offices, I go and see the results of these, they're grown men. These are 40 to 50-year-old men that still feel like they're trying to prove it to dad or grandpa or someone in their life because they were handed too much when they were in their maybe 20s or 30s. And so I incredibly respect my dad for that. And he drastically still to this day lives below his means. He doesn't spend a fraction of the money he could spend. And I really respect that about him. And so it's been a great relationship and I've showed a lot of interest in launching businesses and stuff. And whenever I call him, he helps me. And my brother's been the same, similar path. And I think it's been really great for that relationship. And so when I think about my kids, I love Shaq saying that, I'm rich, we ain't rich, right? I love that. And my dad, at least for me, I at least currently believe I'm not getting $1 when my dad dies. It's going other places. I'm not counting on anything or any inheritance or nothing. If any of my parents or anybody dies, I'm not getting $1. I got to make every dollar myself. And my dad's made that known to us. And I want to make that known to my kids. I think it's one of the great disservices that rich parents do to their kids. But sorry, back to your question about generational wealth. We've read what the Rockefellers do and the Vanderbilt family. And you look at all these rich families and how they built generational wealth. And some, it destroyed their families, and some, they kept the wealth. One thing the Rockefellers did is they created a family bank, and which is pretty interesting. And my dad's considering doing this, but the idea of, let's look at his grandkids or great grandkids. They can come. This would be the idea. We haven't done it yet, but the idea is you'd have a family bank or a fund. And if the granddaughter maybe wants to buy a commercial real estate property, she has to come and pitch the fund. And the investment committee of the fund will decide to lend her money or not. And we'll give it to her at a cheap, maybe it's 1%, a really cheap loan, but it's on a note. She's got to pay that back. And if she doesn't pay that back, she's not a good creditor, and we probably won't lend to her again. And so, or if you want to go start a business, so what it does is it gives your family access to cheap capital if they're willing to. It encourages entrepreneurship. It encourages someone to go out and build a multifamily unit or start a business with the thought of they got to pay the family back. The same thing with school. They come pitch, hey, I'm going to whatever XYZ university. It costs this much. Can I borrow a student loan from the family? Now and so it makes you calculate the cost of schooling. Do I really want to pay for this? This is debt. It's not just free money I'm getting for school. I've got to actually pay this back. And if I don't pay this back, I'm in default and I won't be able to borrow money again in the future. Another thing that allows you to do, if a lot of kids of wealthy families get pitched all the time about charity things. Oh, can your family put money to this and that and this? And it gives the granddaughter or grandson, hey, you know what? Yeah, you can come pitch our investment committee. We meet the second Thursday of every month. The investment, which is all the aunts and uncles and the grandparents, they all meet as an investment committee, and they will vote if we will deploy to your charity or not. And so if we say no, it doesn't hurt the relationship with the grandson and their friend because, oh, sorry, our family, we all voted and ended up not working out. That was a very interesting, the Rockefellers apparently have done this for, decades. My dad wants to do something similar. We haven't set it up quite yet, but I thought it was a pretty interesting concept of having a family bank that people can borrow against, which again, encourages entrepreneurship, but is not entitlement. It's not, you're not getting free checks or trust fund checks. It's a low cost of capital that you can use, but it has to be repaid back.
Oh, that's fantastic. So before we wrap up with our 3 questions, what's the best way, Bridger, to stay engaged with you and follow you and any new ventures coming up in 2024 we should be aware of?
Yeah, for your listeners, if they want, we built an entire free course on funds. Mm-hmm. My goal is to help more people launch investment funds. So it's 100% free if you guys want it. If you go to fundlaunch.com or look up me, Bridger Pennington, on any social media, just send me a DM about a free course. We'll send you a login. You guys it's like 14 videos. It kind of gives you the whole basics and breakdown of a fund, how funds are built, how they're put together. And my sneaky marketing tactic is hopefully we give a ton of value up front that one day, if you want to launch a fund, we actually help people actively launch funds all the time. We launched 130 funds out of our group last year. So that's my sneaky marketing tactic, I guess you could call it. But our goal is just to help more people launch investment funds. So fundlaunch.com or Bridger Pennington, just look me up online and send me a message or go to bridgerpennington.com or fundlaunch.com and it should be right there on the homepage. You guys can get that totally free course, 100% free. I just want to help more people understand this game. I think more people need to understand how funds work, how they're built. Even if you're not starting a fund, you might invest into a fund. You might invest with Ben or somebody else in the future. You need to understand how the docs work. You need to understand how just this game is played because your company you work for might sell to a fund one day and or raise capital from a fund. So that's a good place to find us. And that's what we're doing.
All right, you ready? We're going to wrap up with our 3 questions. So go back to when you were 16 years old and you're in studio with me in Lagoon Beach and we have a couch. And I would say, Bridger, get on the couch, lay down, kick off your shoes, close your eyes, go. You now have seen success, met a lot of people in your life, a lot of lessons learned from your great family. Go back to when you were 16. What would you tell yourself? What would you share with yourself to help you accelerate your life and your career, knowing what you know now?
Yeah, it's funny enough, when I was 16, my brother passed away 3 days before my 16th birthday. So that was an interesting time in my life. I was just going into high school and my brother had just committed suicide. He had 4 years. He's an incredible kid. He was student body president, junior class president, sophomore class president. And he had 4 years of one constant headache that never went away, chronic, migraine essentially that never went away. And he essentially was just in so much pain that he took his own life, which is, pretty hard time. And I was the youngest child at the time. And that, that was in the summer going into high school for me. And I remember kneeling down. So what I would tell myself is, and I think, and I don't take any credit for this myself, but God, I'm a believer in God. And I believe God really coddled me and helped me through that time period. I remember kneeling down and praying if I'd see my brother again one day. And I believe families are together forever. It's something I've been raised in. And I'm a member of the Church of Jesus Christ. And we believe that families are forever and we're sealed together. And I remember just feeling this incredible feeling like I would see my brother again. There's like a light coming out of heaven. And I had, over the next 2 months, it was almost every day, multiple spiritual experiences that I just can't describe about how just, I felt like God's hand just directed me through that period of my life and just, it built this resilience in me. And it just helped me connect with God and my family. And it was actually incredible. I was probably the happiest person at the whole funeral because I was there. I felt like I was complete and full and I was helping people there and hugging people. I was just like, very interesting. And I went on to, I was captain of my sports teams. I was student body president in high school and did all these things. And back to my 16th year, I think the advice that I got and I would still give myself was, cleave unto God and really look to God for your source of truth and knowledge and spend the spiritual time. I think a lot of myself included, I don't spend enough time connecting to the spiritual side of life and going in the wilderness, and whether that's actually physical wilderness or kind of a personal wilderness, but going out and finding God and going to the mountaintop like these old people do and really connecting with the spiritual side of things and making sure that God's has presence in your life and is there and can direct and guide you. And since then I've had a number of incredible spiritual experiences that have helped guide my business and my family and my son and my wife, and just has helped me over and over again. So if I could go back, that's kind of what I would tell myself, is to cleave unto God and make sure I have a strong connection with God and be able to hear him. Yeah. I probably also tell myself to buy more Bitcoin is probably what I'd tell myself as well. So, Bitcoin was just starting when I was in high school.
Okay, so there you go. So it's our last day on earth, God forbid. It's just me and you, kid. And it's our last meal together. It's your choice. What are we eating and what are we drinking?
Oh man. My mom makes this incredible, it's called pine nut pasta. And it's this secret family recipe that she's had for years. And it's got it's like this light pasta. I don't like, I'm not a pasta guy at all, but it's called pine nuts pasta. It's insane. We're having that with a drink. Oh man. I'm not a big drink guy. I just have water like always. So nice cold glass of water, maybe some sparkling water with some lemon in there. But that'd be my last meal, home cooked from my mom. That would be unreal. I'd love that.
So in our studio, we have a black door, and you're more than welcome. Next time you are in Orange County, feel free to come by. I'd love to have you. In our studio, we have a black door. We have a grand piano. We have a drum set and electric and acoustical guitars. And you're in studio with me. I say, Bridger, you can have any musician or band walk through that black door and play us a song. Now, they can be living or deceased, Bridger. Who would you want to come through that black door, and what song would they play us?
Oh man. I would say first one that comes to mind is The Killers, Mr. Brightside.
Oh,
if you know that song, they're an early 2000s band, like one of those early 2000s boy bands. The Killers, Mr. Brightside, I think would be pretty fun. That'd be a pretty fun one.
Sounds good. Well, Bridger Pennington, thank you for joining us today. If you are interested in listening to more episodes like this, where we drop amazing content and knowledge, just like Bridger did on our audience, kick that right-hand button and click subscribe. Click the like button as much as possible. So as I say out in the ether, we can let this content and let it go viral. To follow me, go to benreinberg.com. I am on all the different social media platforms. And feel free, if you are an accredited investor and like to invest passively in commercial real estate, look no further. Go to alliancecgc.com. Feel free to log on, check out our new fund. Speaking of funds, the Alliance Medical Property Fund. It is the hottest fund in the United States. We are acquiring medical properties throughout the United States and building wealth for you and your families. So if you're looking to build a legacy on your own, look no further. Go to alliancecgc.com. Bridger Pennington, thank you for joining us. What a pleasure and great seeing you.
Thank you for listening to the I Own It podcast with Ben Reinberg. To hear our past episodes and connect with Ben, visit benreinberg.com.